A joint venture between George Kent and China Communications Construction Company has won a 1 billion ringgit work package for the MRT Line 2. The package, which involves a track work, maintenance vehicles and work trains, is in fact a major one for this line. MRT Corp CEO Sharil Mokhtar says the group made its pick on the basis of the best evaluated tender, though in this case, the George Kent CCCC-George Kent has quoted the lowest price. He expressed confidence towards the JV company, saying CCCC comes with very good technical know-how, while George Kent has a strong presence in Malaysia's railway industry. CCCC holds a 51% stake in the JV, while George Kent controls the remaining 49%. Up to date, 22 work packages for the construction of MRT Line 2 have been awarded. Last week, Pemandu CEO Idris Jalla declared that Malaysia is no longer stuck in the middle income trap, while opposition lawmaker Ming doesn't see it that way. He does agree that from a GDP per capita standpoint, Malaysia may have escaped the middle income trap, but on the ground, it is a different story. Based on his own analysis of government data, Ming claims that demand for public sector jobs is at an unbelievably high level. This is because the private sector is not offering enough well-paying jobs. To make matters worse, job opportunities in the civil service itself have been shrinking, while menial jobs in private sector are now held by foreign labour. Ong says the only people who are making big bucks are the top 20 to 30% of civil servants and the businesses which earns large profits, but don't share their earnings with their workers. RHB Bank's numbers aren't looking too rosy this second quarter. Net profit fell due to higher bad loan allowance and impairment on a corporate bond in Singapore. Bottom line was down 37% at 559 million ringgit. Meanwhile, revenue climbed 1.5% at 2.7 billion ringgit. The group declared a dividend of 5 cents a share. Looking ahead, RHB said it was mindful of the challenging macro environment. Still, the group remains confident on its business outlook and expects to perform better this year due to stronger capitalization, leaner organization and greater efficiency. Parkson Holdings is in it for its third straight quarterly loss amid softer consumer sentiment and fierce competition in China. The group posted a net loss of 96 million ringgit, widening 10% year-on-year from a net loss of 87 million ringgit. Revenue for the quarter inched 3% higher to 884 million ringgit. The company said the improved top line was due to higher revenue from its Malaysian and Indonesian retailing business. No dividend was declared for the current quarter. Parkson expects its retail operations in Southeast Asia to remain challenging in the near future, particularly in Vietnam. Still, it sees opportunities in Indonesia and believes the underserved markets in the country could deliver encouraging results. Bowsted Holdings saw its second quarter net profit jump after selling its stake in its associate company Jandela Hikmat as well as Plantation Land. Net profit surged to 226 million ringgit from just 2.9 million last year. Revenue-wise, it declined by 6% to about 2.1 billion ringgit. Bowsted declared a second interim dividend of 4 cents a share. Group MD Lodin Wok Kamarudin says most of the group's division performed well, and this demonstrates its resilient focus on unlocking values within its business units. The property division was the biggest contributor with nearly 200 million ringgit gain on the disposal of Jandela Hikmat. However, this was mitigated by a weaker performance by the hotel segment and unrealized forex losses.